The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. Applying for a mortgage. Here's what you should avoid once you do. And we might even give you some tricks and tips on what you should do once you are applying for a mortgage. Let's get into the report and we'll see where we go from there. And we'll have a little chat, you and me. So let's take a look at it. While it's exciting to start thinking about moving in and decorating after you applied for your mortgage, there are some key things to keep in mind before you close. Here's a list of things you may not realize you need to avoid after applying for your home loan. Maybe I'll give you the things that you should do, and then we'll get into the things to avoid. Visit optoutprescreen.com, optoutprescreen.com. Unless you like getting unsolicited phone calls and lots of junk mail and credit card offers and all these other garbage things, optoutprescreen.com tells the credit bureaus they're not supposed to be selling your information. And you can go in there and put it and log in for a 5-year term. Optoutprescreen.com. No spaces in there. Optoutprescreen.com. I also highly recommend you always get on the do not call list. That's another good one right there as well. Don't deposit large sums of cash. Lenders need to source your money, and cash is not easily traceable. Before you deposit any amount of cash into your accounts, discuss the proper way to document your transactions with your loan officer. Don't make any large purchases. It's not just home-related purchases that could disqualify you from your loan. Any large purchases can be red flags for lenders. People with new debt have higher debt-to-income ratios. How much debt you have compared to your monthly income. That's the debt-to-income ratio. Since higher ratios make for riskier loans, borrowers may no longer qualify for their mortgage. Resist the temptation to make any large purchases, even for furniture or appliances. Actually, I had a family that bought a motor home and a new Mercedes while they were in contract, and they were surprised, even though we told them don't do that. They were surprised when they're at the end of the process, the underwriters are going to go and do what's called a pre-closing credit report, and they will find out. And they no longer qualified. We had to jump through all kinds of hurdles to get that done for them. No large purchases. Don't co-sign for loans for anyone. When you co-sign for a loan, you're making yourself accountable for that loan's success and repayment. With that obligation comes higher debt-to-income ratios as well. Even if you promise you won't be the one making the payments, your lender will have to count the payments against you. Do not switch bank accounts. Lenders need to source and track your assets. That task is much easier when there's consistency among your accounts. Before you transfer any money, speak with your loan officer. Don't apply for new credit. It doesn't matter whether it's a new credit card or a new car. When you have your credit report run by organizations in multiple financial channels, that'll be mortgages a channel, credit cards a channel, autos a channel, it will have an impact on your FICO score. Lower credit scores can determine your interest rate and possibly even your eligibility for approval. Do not close any accounts. Many buyers believe having less available credit makes them less risky and more likely to be approved. This is not always true. A major component of your score is your length and depth of credit history, as opposed to just your payment history, and your total usage of credit as a percentage of available credit. Closing accounts can have a negative impact on both of those aspects of your score. There are some hacks in there that we can share with you that we understand and we can look at and see if they apply to you. Do discuss changes with your lender. Be upfront about any changes that occur on your existing, or you're expecting to occur when talking with your lender. Blips in income, assets, or credit should be reviewed and executed in a way that ensures your home loan can still be approved. If your job or employment status has changed recently, share that with your lender as well. Ultimately, it's best to fully disclose and discuss your intentions with your loan officer before you do anything financial in nature. Bottom line, if you want your home purchase to go as smoothly as possible, remember, before you make any large purchases, move your money around, or make major life changes, be sure to consult your lender, someone who's qualified to explain how your financial decisions may impact your home loan. And if you have any friends, family, or coworkers looking to borrow for real estate, Can we count on you to introduce him to us? That is the Real-Time Real Estate segment brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com.